Hello and welcome to the Money Magpie podcast. I'm Jasmine Birtles, the founder of Money Magpie. And in the Money Magpie podcast, we're constantly looking at ways that you can make the most of your money, mainly through investing. And today we're asking that age-old question, is the stock market about to crash? And to help me work out if that is the case, I have two experts, Danni Hewson from stockbrokers AJ Bell and Alex Harvey from investment managers Momentum. Welcome to you both.
Hi, Jasmine.
Morning.
Thanks for having me.
Hi, good to see you both. Thank you. So let's start with the big question. The stock market in the UK, picked up quite nicely this year. Many say it's inflated, others say it's undervalued. And it certainly didn't have as bullish a run as the US stock market. But as an overview, Danni, where do you think we are with the UK stock market? Should we be all taking our money out?
Well, have you got a crystal ball? I think that is always something that anybody who's looking at investments would love to have. I think one thing that we can say with absolute certainty is at some point over the next 3 to 5 years, we will see some kind of crash or correction because that is what history points us to. But in terms of should we be taking our money out? Well, at the moment, where would you put your money? If you look at interest rates, they are still at historic low levels. So you're not going to make money there. You'd be better off sticking it under your mattress, many people would say, although, of course, security concerns, and I really wouldn't advise that. But at this point in time, we are seeing a great deal of volatility and there are concerns. And over the last week, you'll have noticed it's gone up, it's gone down. People are concerned about inflation. They're concerned about new variants. And I think what you should be doing right now is taking a long, hard look at your portfolio. What investments do you have? Do you still feel confidence in those companies? How have they performed over the lockdown time? What are their earnings looking like? And it's always a good idea to take a look and just think about what's going to happen over the next 10 years. How well placed are they to ride storms of higher interest rates? And obviously the change in our whole work-life balance, what we do, how we consume things, everything is changing. So no, I don't think taking the money out of the stock market is a good idea, but I do think it is worth taking a minute, taking a look and just making sure that your portfolio is diversified across a whole range of different stocks, from value stocks to growth stocks to different markets, and maybe also think about some other investments as well. I know a lot of people put money into cryptocurrency. We've seen how that's been performing over the last couple of days. And that is also why we're seeing the price of gold going up as well. People are worried, but I think right at this point in time, when stock markets crash, we usually see, history tells us that they do recover and often they reach new highs.
Yeah, well, true. Yes. Alex, what do you think? I mean, we're talking about portfolios. I think a lot of people don't realize they have a portfolio. I mean, it's basically a collection of investments. Do you feel that this is what people should do? Take the long view with this?
Absolutely, I do. I share that view entirely. We're all investing for the long term and we'll have some outcomes and retirement plans. And these are a long way off in the future. So you've got to take the long view. It's a lot less stressful. If you don't look at your investments every day, feel the pain of them going down, or you can look through for a longer time horizon, then it's going to be a lot more comfortable. And importantly as well, what you don't want to be doing is sort of capitulating when the market's sold off, which is probably going to be a buying opportunity for the long term. So take the long view, and I agree. Yeah, definitely have a diversified portfolio.
Yeah, because having a portfolio sounds like the sort of thing that clever people in the city have, and so I quite often like to tell people, if you've got a savings account, you've got some properties, you say you've got a pension, you've got a portfolio, you have that is your portfolio. And ideally you should have some stocks and shares investments, probably through ISAs, and your portfolio increases. But a lot of people at the moment are talking about inflation, particularly because of the stimulus packages, as they say in America, quantitative easing, printing money, whatever you'd like to call it, over the last, year and a half, really. Has that been priced in, or is the spectre of inflation bigger, darker than we realised? Alex, what do you think?
Well, it's in the process of being priced in. We've seen a lot of that through the first quarter of this year, particularly in February, early March. No one's been talking about it for years. No one wanted to talk about inflation for a long time. It's reared back. It has been around, since the financial crisis. I mean, it depends. Inflation as measured by, the basket of goods that we go out and buy, the widely reported inflation numbers has been more muted. But asset price inflation, stock markets, property, etc., has been high. So it's not that it hasn't been there. It is already embedded. And it is expected these year-on-year effects at this point in time. We're probably feeling it most acutely as inflation is a sort of year-on-year measure. So it's very low a year ago. So it's expected, but it's the surprise. That's what spooks investors and spooks the market a little bit. And it's managing for that. And we should be expecting higher numbers. The question is, will that roll over? And what will that do to asset prices? And, it can cause a bit of concern if those numbers come in a little bit high.
Yeah, Danni, I mean, I'm just wondering if we get rampant inflation, isn't that going to cause all sorts of problems for a lot of different companies, not just individuals, those that use raw materials, etc.?
A little bit of inflation is good. Everybody expects to see the economy picking up. And inflation is a bit of a double-edged sword as well, because the one thing that a lot of companies are really concerned about is interest rates. And if inflation goes too high and too hot for too long, that is when central banks are going to have to start to take a grip, because they don't want to see people unable to buy the basics that they need to live. And interest rates at the moment are at record lows, which has enabled huge amounts of borrowing, not just for consumers, all of us, but also for companies as well. So it's helped them get through what's been an awful period for some companies, but it's also meant that they're now saddled with huge amounts of debt. So as well as concern, about rising prices, what they have to pay in order to get the raw materials to make their goods, which they then potentially would have to sell on at an inflated price to the consumer, there's also a big concern about how they'll be able to continue to pay for the debt that they have built up. Now, I think one of my colleagues likes to say that, the best cure for high prices is high prices, because people, they don't want to pay all of that much for certain things. And because we've got the internet now, we can shop around, and that's been great. But there are a couple of things which are really concerning me. And one is the shortage of computer chips that we have seen, which is creating a real bottleneck in terms of supply for things like games, phones, cars. I mean, it is incredible the number of industries that use these things now. And because there is a shortage, there will be delay in some products reaching market. And by the time they do, they will come with an inflated price tag. And at the moment, because you've got a huge amount of pent-up saving, pent-up demand, consumers might be more willing to pay that than they would normally be. So there are some warning signs. But of course, there are some businesses, some companies that will do really well out of increased commodity prices and really well out of consumers spending more. And we do need the economy to run hot for a little while. It's just making sure that it doesn't run hot for too long and we get into a cycle of, wage growth, price rises, but that's okay because companies are making more money so they can pay more, and then price rises. And that way, madness lies.
Yes. You're saying about some companies will do well out of it. I'm guessing we're talking miners, oil companies. Which sectors do you think will do well out of inflation?
Yeah, certainly miners, energy companies. You've also got, some of the companies that make consumer goods, because they are going to be able to sell them to customers who are now looking desperately to buy those goods. So they will, if they're able to pass those price hikes on to consumers, and at the moment all indications suggest that they would be able to, that is one area where inflation, a little bit, commodity price rises will be good for them. But of course, there's always a downside.
Exactly. Now, we've seen social media affect a few American stocks, but it went a bit quiet. Alex, what do you think? Are we seeing these groups of small activist investors becoming more powerful, or was that just a little bit of a blip when they were bored at home?
Yeah, that's an interesting one. It's been fascinating to watch that play out. It's not activist perhaps in the sense of the activist investor in terms of pushing for change in governance and board, etc. It's this more sort of anarchic type of approach, Rage Against Wall Street, and it's been really quite interesting. But I think a lot of it as well has been through the options market, and it's effectively done on margin. And credit's being afforded to some of these participants to take these positions that maybe they otherwise wouldn't be doing. But it's not built on fundamentals. My worry is that the last person left standing will be the man on the street who can afford to lose out the most. So prices in the market suggest that there has been a bit of a shift in power, but I'm not sure whether that will be lasting. And regulators may start to take a closer look at this kind of activity, perhaps. And
well, yes, I think them and Elon Musk probably ought to be looked at by the regulators, but it's a bit difficult with crypto, of course. The UK stock market, do you think, is still worth investing in for the long term?
I do, absolutely. And Danny sort of highlighted, some of the sectors that can benefit from this reflationary trade. And the UK market has more of a tilt and a bias to some of these sectors than the US, for example. So that makes it attractive in that regard. But also the UK market is relatively cheap compared again to other markets like the US. So investors who might be investing globally, tilting your portfolio a little bit to the UK, or more than a little bit, would be good today. We've got a lot of value names in there that have done really well since sort of Vaccine Monday, as it's often referred to. And of course, Brexit, we're looking at sort of through the rear view mirror now, which is pleasing after 5 years. There's still things to work through for sure, but it's more about looking forward now than back. And I think there's great opportunities. So get on board.
And also, Danny, what about dividend-bearing shares? Because increasingly, I'm looking at these for all types of investors. It used to be that I would say, dividend-bearing shares, that's great if you want an income. If you've retired and you're looking for a bit of a better income than gilts or something. But increasingly, I'm thinking, actually, dividend-bearing shares, if you reinvest the dividends, those can be a really good idea. And I'm thinking that if for example, we're coming into a rocky period, we may not, we don't know, in the stock market, maybe dividend-bearing shares are a bit more solid, if you like, a bit of a better bet. But what do you think about them?
Well, I think a lot of people do like dividend-bearing shares just for that. And there are a lot of funds that go down that route, that they create an income for you through dividends. And of course, if you can invest those dividends back in, then you can see your return go up exponentially. But what we saw last year is that even these big names that we know and love, who give us the dividends, they're not immune to some of the economic hits like something the size of the pandemic can deliver. And we saw a lot of dividends being cut. Now, we're now seeing them being returned, but we do need to bear in mind that those companies usually don't deliver the same kind of growth that you can get from something like the FTSE 250, some of the small caps. We're seeing some really big growth there, and you can make some money. So as with anything, I would suggest that you look at a diversified portfolio. Yeah, absolutely think about those dividend shares, but also look at growth. I mean, nobody in their right mind would have turned down £100 being put on Amazon at IPO, because they would have made over $1 million by now. So it is thinking long term, and it is thinking about diversification. And just in terms of making decisions, if you're seeing the stock market, the bottom fall out, don't make those decisions on a knee jerk. Don't panic sell, and don't panic buy.
Right.
By all means, have a look now, have a bit of a shopping list. What might you like to have in your portfolio that's a bit too expensive for you at the moment? have a little bit of cash in reserve, but don't take the money out now, because it could be that we continue this bull run for a good few months, maybe even years, and then you're missing out on some of the returns. So it's about taking a really thoughtful approach to your investing, rather than, fear of missing out and maybe doing something that you're going to regret later.
Oh, yeah, good advice. Because I know I was going to say, that it's difficult to predict what the stock market's going to do. But what's your prediction? And essentially, Danni, I think that is your prediction. Hey, it might crash, it might not. But if you know what you want, you'll be able to see, like Warren Buffett does. Why not copy the best? What's cheap, and when it's cheap, I'll have it then.
Yeah, but make sure that you're not just buying something because it's cheap. And some of the companies which have made a lot of money for investors in the past might not give you the same kind of returns over the next 10 years. A lot is changing. If you just think about working from home, if you think about the shift to green energy, to renewables, you need to keep an eye on how those companies are going to deliver in the next 10 years. And just because something has done really well over the last 10 years, it doesn't follow that they're going to do the same over the next 10.
Yes, and finally, Alex, what's your final piece of advice, particularly if we do suddenly go into one of those sort of vertiginous drops that the stock market likes to throw on us every now and then?
As Danni said, don't panic. I think that's important. I like the idea of having a shopping list ready to go, and see it as an opportunity to get in. Hopefully, there'll be people listening to this who might not have had any investments, and build a portfolio. Don't put in more than you can afford to see. Go with the gyrations of the market. Stock markets do go up over time. That's what they do, and just the maths leads them that way. So you need to get in. Just
make sure you do your homework, and if you do need to get advice, don't be afraid to do that. I've got to stress, I'm not an advisor, I'm an analyst. So don't make any decisions if you're not sure without talking to somebody first.
Oh, nice. No, thank you, Danni. Really helpful advice. And thank you, Alex, as well. Alex Harvey from Investment Managers Momentum, and Danni Hewson from Stockbrokers AJ Bell. Well, it looks like we can continue to invest in the stock market on a regular, measured basis, whatever the ups and downs. That's it for us for this week. Keep coming back to the podcast for more investing and personal finance tips. And don't forget to follow us on social media. That's at Money Magpie on Twitter, Facebook and Instagram. And for me, it's at Jasmine Birtles on Instagram and Facebook, but just at Jasmine on Twitter. Today's producer was Jenny Birtles, and our music was composed by Thomas Hewitt Jones.